Well, that's a great question. I think it's the fact that what really changed my thinking on this was in 2013 when I started to see the work that eBay was doing, looking at their data on who is using e-commerce and how a company is using e-commerce to trade. And what I saw was patterns that turned everything on their head. What we have typically seen in international trade is that small businesses are not really participating too much in trade. Trade is generated by large companies in just about any one country. Bulk of trade comes from large businesses. And if small businesses start to export, they export to just one or two countries and typically don't last as exporters. And eBay's data showed all these patterns reversed, that there was all these small businesses that could actually export using e-commerce, export to multiple markets, derive a large share of the revenue from exports, and actually small businesses exports were at a par of the large company exports. So that has kind of the whole finding how transformative e-commerce and digitization is, particularly for small business trade, has been driving me to look at this. Why what are then the challenges and bottlenecks that we need to resolve through trade policy and through other policies to further small businesses' access and use of this, if you will, silver bullet for exports. I really think it's almost like a magic wand. It's something that we have been looking for in international trade for years on how we can help companies export. And I saw those numbers and I thought, well, e-commerce is that. But how do we then enable more companies to use it? How do we remove barriers for the cross-border flow of goods that are sold, goods and services that are sold online? So that's a long answer, but I really think it has been such a transformative force in trade. And to your point, I've actually just finished a manuscript to doing a book with Stanford University Press on the broader patterns of how technologies are changing trade. Not only e-commerce, but technologies like 3D printing, how it's changing global supply chains, blockchain, how it can revolutionize trade finance in particular, and smartphones, how they can basically globalize globalization when everybody is connected to the global shopping mall in the palm of their hand. So I think this has it was e-commerce that started my thinking on how technology is reshaping trade. Again, of course, technology has done this for centuries, has reshaped trade patterns over and over. Containerization, steamships, railroads, all of this has over and over revolutionized how we do trade. But now I think it's digitization that's doing it, and it's not just e-commerce. It's technology as a whole, like you pointed out. Well, I think it's happening in China because of the Chinese interest in actually having their domestic, more of the domestic suppliers rather than buying everything from outside. And in a way, it's happening just naturally because of development, industrialization in China, that more and more companies are becoming qualified suppliers there, I think. So I think that's absolutely true. What I think will really shrink supply chains is 3D printing, because you don't need to anymore ship parts and components from outside. You can literally, have the supply chain be as long as the man and his laptop, and design a part and component on your laptop and print it right next to you on a 3D printer. And if that's, I think this technology, as I've looked at its economics, it has such powerful, compelling economics that I don't see how it will not proliferate, but it has not still been utilized by manufacturers around the world. I think in the US, the number was something like 17% of companies have used 3D printing, which is still very low. But all data I have seen from large companies like Volvo to small companies that do some medical device, for instance, the economics and in terms of the lead time, in terms of the cost savings in materials, in terms of the cost savings in shipping and customs procedures, all of that, when you ship a part and have it made somewhere else, the reductions in defects of products, all of these components are so compelling to me, and the cost savings and the time savings for companies when they use 3D printing, that I think this will be the force that will truly shrink global supply chains and will reshore them inside factories. And when you think of it coupled with robotics, that robots can then take these parts and components and assemble them. Companies are freed from the considerations of where do I find my next supplier, who supplies quality work, how do I structure my global supply chain so that I reduce the customs and trade costs to a minimum, and where do I find the low-cost assembly workers to assemble these? I think companies will be freed from all of that, and by virtue of that, my belief is that production will localize more and more. That you will have smaller production units near major cities like Buenos Aires or Sao Paulo, where production is happening in a more customized basis for the local consumer. Not across industries. It of course matters a lot what kind of industry you're in, but I think this is the tendency. Like, economics are driving to this. It seems to me, when you look at all these different technologies. Well, this is a $1 trillion question, probably more. It really is. And, on the one hand, I think, developing countries like in Latin America that have had challenges with trade costs and have challenges with bureaucracy and institutions, that a lot of these technologies are disrupting, helping companies overcome these challenges. But at the same time, there are probably the odds are increasing that more companies and people can be left behind in this, particularly if you don't have the skills. And the story is the same in advanced countries, but in developing countries it may be more poignant. That if you're not competitive and you don't have the skills to compete in the digital economy, build the machines or use the machines, then you'll be probably left behind. However, I've seen these projections that can be very alarmist, that there's going to be soaring unemployment in countries like Asia or in maybe Latin America, India and China. I've seen these forecasts. And I also ask myself, well, we've had these fears about the impact of new technologies on employment for centuries. We have for 200 years. David Ricardo, who is the father of comparative advantage, he actually wrote a stream of literature about worrying about the impact of technology on British workers 200 years ago. And when we look at least the US economy, we have as many jobs. The unemployment rate is just the same as it was in 1900. So, you may ask yourself, well, if technology has a detrimental impact on jobs, then why are there still any jobs? Or if trade has detrimental impact on jobs, why are there any jobs? Because we've had a tremendous wave of technology and trade in the past 100 years. And we have, unemployment is no higher. There's no mass unemployment anywhere. And in fact, we've had more people like women entering labor force around the world, and still unemployment levels have not risen. So the question is that, is this time different? Are these technologies and artificial intelligence and others, are they so different that they will be then disrupting economies and reducing jobs blue collar, white collar jobs, and having impact on, like, mass impact on unemployment. I don't think so personally. I think there is much more hype around this. There's a kind of a hype cycle right now going on, but time will tell. Maybe, about 150 years ago, 200 years ago, we worked a whole lot more. We worked something like 2,500 hours a year. Today, in advanced economies, we work like 1,500 hours a year. And we're like 40, 50, 60 times richer than we were then. So again, it doesn't mean that even if we were to work less and utilize technology more to be more productive, that we would be worse off. We may be working less, we may have more leisure time, but we may be, only better off as humanity. If it comes to the challenges of, this is the conventional line, I think, but if it comes to the challenge of, okay, we actually do see unemployment resulting from utilization of technology in companies. I don't believe this is, I think technologies will augment labor more than replace it, just, and that technologies are not infallible either. But let's imagine that happens, then I think we have to think of these creative ways of, taxing and spending that have now been tested in countries like Finland. And it's good to think about those. It absolutely is. And in some contexts, they may be actually a very good, even at the micro level, say in the Midwestern United States, they may actually be a good thing to have. But I think we're still very far from, mass unemployment produced by technology. We've been in this discussion for 100, 200 years, 300 years, and we still haven't seen it. So is this time different? Well, I don't believe so, but some do. Like Elon Musk, I'd start taking it seriously when he says something. Yeah, well, first of all, like you said, the ability for companies to leverage data is essential for them to service their customers better, improve their operation, improve even environmental, quality of their production and so forth. So I'm a big believer in the benefits of data. At the same time, as a consumer, I personally, of course, want to have some boundaries around how my data is used, or some choice that is very transparent on how my data is used. So I appreciate the concerns behind GDPR. So where I am on this personally is, one, I've seen simulations and economic models on the impact of GDPR, and they are very negative on European companies that comply with it, but that just are not then able to leverage the data that they used to be able to leverage, as well as for European consumers and businesses. So for instance, if you think of credit scoring, you're not necessarily able to get the similar kind of consumer data on consumers' credit as readily as a lender as you used to because of GDPR restrictions. It could be the case. It hasn't yet to be shown how the regulation is actually working in practice. But if that's the case, then you would stifle very positive developments like use of alternative finance in a society to further, say, house mortgages and things like that. So the simulations and analytics I have seen on this are very bad, and mostly bad for European companies and consumers themselves. And if they bear out, then that should lead to reduced economic growth across the Eurozone. And of course, that would have repercussions to companies around the world that use European consumers' data. At the same time, I was recently in the UK and in Sweden, and we talked with a number of technology companies, like smaller companies, about the impact of GDPR. What I find is that there is a lot of uncertainty as to, or a lack of knowledge and uncertainty about what the regulation exactly is going to be. Like, people see it on paper, but they don't necessarily understand how it applies in practice. So I think, and they don't even know what part is going to be kind of enforced and who is going to be, facing that burden of enforcement. So I think, and many countries don't necessarily have a huge, army of regulators to monitor what companies are doing either. So I think what we have to do is look at what's on paper and then look what happens actually in practice. For now, I see companies in Europe that I've talked to, which is a rather limited sample, but at least, I've seen them over and over say that they are taking the basic measures that they would have to take in order to comply with the regulation, but then they will kind of be on a wait and see mode, expecting that probably regulatory action, if there is some, will hit some of the bigger companies, for instance, in, say, financial services or social media, that will then set the example for the others of how the market should be behaving. That's one hypothesis. So while I think GDPR is restrictive and it's very difficult, particularly for small companies, to meet, we'll have to see how it actually works in practice. Personally, I think it looks on paper looks very onerous, and the simulations I have seen are not good for European consumers and companies. But and that's why I'm concerned about the interest of countries, for instance, in Latin America, to pattern or model their regulation after GDPR. You have to really look at the repercussions of these digital regulations on businesses and on their ability to conduct trade. And furthermore, onerous regulations, while large companies like Facebook are probably able to meet them, they have, bigger pockets. Small companies are not necessarily. So I think policymakers also want to pay attention to this, that, if they put in regulations that are supposed to impact how big companies like Google or Facebook do business, they need to then think of how is this regulation going to impact small companies, and furthermore, the incentives of investors in small companies. Because if you have very regulated sectors, you will not have investors in companies like that. So that's a long-winded answer again, but I think, I'm in the kind of wait and see mode with GDPR, but on paper, at least, it doesn't look that great. I think the US kind of the CBPR, the APEC alternative, which is more turns on self-certification and regulation, is still rigorous, but I think it's a viable alternative that we want to see how it works. Yeah. First of all, I think we want to also note that, even if as a consumer, we may want to protect our data to some extent, we also need to recognize that we are oftentimes better off because companies are able to use our data and are able to offer us better financial services or better products, more targeted products and services and so forth. So there is that for consumers as well to think about, is how will this ultimately impact me? And I think in the US at least, consumers have come to realize that their data is out there, but they still like to have certain the efficiency that comes with sharing their data. So there's that. In Mercosur, I think what has been positive is this. First of all, I think we should always emphasize in agreements free flow of data across countries, that we should not start to put barriers and walls around countries on the flow of data. And some of the examples, like the Chile-Uruguay FTA is a very good example, which basically has the TPP's digital regulations chapter in it. And I think Argentina and Chile have reached something similar. and all this talk in Brazil that has been about data localization and having to have servers there is also like not positive. So I think we should have trade agreements that emphasize, free flow of data, no data localization, and then, every country could have their own exceptions to that. For instance, many countries around the world require user consent for companies to access the data and then transfer it across borders. So I'm very much in favor of that once a consumer gives his or her permission, then a company should be able to leverage the data that they have and transfer it across borders. I don't see that we are going to have a regional digital economy in Mercosur, let alone in Latin America, if we put barriers on the flow of data across borders. When I've done surveys also with even small companies in Latin America that do e-commerce across borders, they tend to highlight some of these issues of data privacy and data localization as worrisome to them. So these are not only issues for large companies or large platforms or foreign digital multinationals. They are also issues for the local small businesses that are seeking to sell their goods and services across borders and are using Argentine company that's maybe selling on Mercado Libre and having its own online store is selling to consumers in Uruguay and Brazil. And then, it wants to access their consumers, some of their data to understand what the consumer liked and what the consumer ordered in order to advertise and market to that consumer again, or improve their services. And I think these regulations will be most detrimental to these guys, small guys that could have more competitiveness, could regionalize their operations if they were able to use data, but are not. If they're not able to, then they will probably remain as local players, selling to local consumers, and that defeats the purpose. So the bigger point is, I think what the policymakers need to do is think of kind of mainstreaming trade considerations into digital regulatory policymaking. There's a lot of different agencies in countries like Brazil. Agencies are coming up with their own regulations, but they don't have considerations far-sighted enough to how companies actually do business and how they engage in trade. So you have these unintended impacts on companies' trade because you were wanting to protect, say, a consumer, but then by just as collateral side effect is that companies are limited on how they can use data, and that will have the repercussions on consumers and economies as well. So these would be very useful for Latin American countries to have always running by regulations through a number of agencies, including the Ministry of Economy and Trade, to assess, and industry associations, to assess the trade impact of these different digital regulations. Yeah, it's a very good question, and based on the surveys I've run in Latin America, I think it varies also across countries, so that there is not a one-size-fits-all prescription or solution. But what I do see over and over from surveys and talking with companies, including companies like Mercado Libre, who really know what's going on as well, is number one is the logistics, obviously. Cross-border logistics, the old challenges to trade that are now only amplified when you have the proliferation of parcels coming to customs, and customs don't know what to do with them, how to tax them, how to ensure that they are actually secure, and so there's kind of customs procedures issues, as well as postal services that need to be revised across the region to graduate to the e-commerce era, if you will. And in fact, I think this will happen because hopefully postal services will realize that e-commerce is a big revenue driver and they need to be more efficient to service e-commerce. But I do think there needs to be, postal services will need to be renewed because much of e-commerce in Latin America goes through them. And then logistics and customs procedures will need to be modernized further through things like, predictive analytics and machine learning, where you can actually have large amounts of trade coming in and you can find the anomalous shipments and the illicit shipments faster than otherwise. And then this disparity between postal and express shippers and private operators, we need to address that as policymakers. So the logistics part, just the total cost of delivery, customs procedures and postal operators that are contributing to that total cost, I think will have to be looked at. The other is, of course, the overall digital regulations, not just data, but things like internet intermediary liability laws, consumer protection laws, and so forth, that we have interoperability and we actually monitor the interoperability of these domestic regulations in Latin America. And we have a precedent of that in Europe. European Union is only now trying to back into a single digital market, where they've had national regulations in 28 countries that are different digital regulations, consumer protection laws, copyright laws, and things like that. And now they're trying to iron this out. Meanwhile, when you look at the economic impact analysis of the fact that they've had very different national, or even different, not necessarily even very different, but different national regulations, the impact of just different consumer protection laws in different countries has been like 12 billion euro annually on e-commerce. There will be $12 billion euro more e-commerce inside Europe if the consumer protection laws were more harmonized. Because right now you're a small business in Spain and you're trying to ship to different countries and you have to deal with all kinds of different consumer protection laws. And consumers are also concerned about the laws of the companies in other markets. Like, do these companies actually deal with the same standards as my country does? So, Latin America, we should get ahead of the curve, and it may be already a little late. But we need to really coordinate this and have dialogue and analysis of what is the impact of divergent regulations and how we can ensure that regulations interoperate across countries. And this may sound kind of removed and distant and whatnot, but the economic impacts can be very significant if we get these right. And maybe we can get it right through FTAs that look like something like the TPP's chapter. I don't know, but I do think we cannot just drop the ball, and we need to ensure this in order to further regional integration. This is now the last frontier, the next frontier of digital integration. And then the final thing, e-commerce and digital economy don't exist in a vacuum. They exist in the business environment that is in different countries, and we still have work to do there. Over and over in surveys, I find that the overall business environment, how you register a business, the steps that you have to take to license a business, or the steps that you have to do to prepare your taxes, all the typical doing business aspects will also have to be kind of modernized bit by bit. And I think Argentina has been doing great in this, like bit by bit, streamlining all these elements to enable entrepreneurship. And then, finally, something that doesn't come up that much in surveys, but is important, is the cross-border payments. And maybe it doesn't come up in surveys because not a lot of companies are still doing e-commerce cross-border in Latin America, but there are issues with foreign exchange fees in countries like Brazil, where even a small shipment, you have to have a foreign exchange transaction associated with it that is very costly and oftentimes much costlier than the actual shipment. Deters commerce altogether. So if if central banks and finance ministries and central banks in particular came together and said, well, we will allow new creative mechanisms to do cross-border payments. For instance, do things that, there are operators that, you sell $100 from Argentina to Uruguay, and then under the same platform, you sell $100 from Uruguay to Argentina. You don't necessarily have to have any money even flow. You just have under one operator, the money is just exchanging hands domestically, if you will. So there are innovative mechanisms, but these require this interoperability of payment systems and reduction of the fees at the border when companies pay. These need to be, blessed, if you will, like new tools need to be blessed by regulators and central banks. And, I think this is something that could be very useful because, in B2B, B2C e-commerce, this is, in both cases, the foreign exchange fees are challenging. At least this is what I hear over and over. So, it requires bringing the central banks to the table across the region. And somebody like Intal or IDB would be perfect to do that and facilitate that and say, well, guys, how do we reduce the cost to a minimum for a small company in Argentina that wants to export across Latin America, small items like $50 items? How do we reduce the foreign exchange fees and all intermediation fees for that company?